Hey folks, Dan Frio here, the rate update. Today is November 30th, 2021. Man, this month is flying. This year's flying. I got some great news for mortgage rates. I got some bad news for your stock portfolio. And I don't have so much good news for the economy. So don't go away. That's what we're going to talk about next. Well, if you're just getting up and you turned on the news, you're going to see this new coronavirus is playing a toll on the markets. So what's going on? Let's recap something real quick. But I wanted to inform you guys. Federal Reserve Chairman Powell is speaking today. I'm going to let you see a short clip from CNBC. And then when we come back, I'm going to break it all down and what I think rates are going to do today and the rest of the week. So don't go away. We'll talk about that next.
Sarah, thanks. Fed Chair Jay Powell will say in testimony before the Senate that the recent rise in COVID cases and the Omicron variant pose downside risks both to economic growth and to employment. He'll also say the new variant increases uncertainty about inflation. And a comment that sounds a little hawkish relative to this new virus and virus concerns. He says greater concerns about the virus could reduce people's willingness to work in person, which would slow progress in the labor market and intensify supply chain disruptions. Means he thinks it could be potentially more inflationary. Goes on to say the Fed will use its tools, by the way, to support the economy and the labor market and prevent higher inflation from becoming entrenched. Inflation, he says, is running well above our 2% longer run goal, and the factors pushing inflation will linger well into next year. Among those factors, labor slack, he says, is diminishing and wages are rising at a brisk pace, a potential sign of concern for the Fed chairman from that area. Supply and demand imbalances, he says, have contributed to the notable price increases, and he does expect inflation to move down significantly over the next year. On the economy, Powell's going to say the GDP appears on track to grow 5% this year, and labor market has continued to improve, but there's still ground to cover. Wilf?
Steve, thank you. We look forward to that testimony tomorrow. But the next meeting is what, middle of December?
Middle of December. They have a couple weeks, Wilf, to sort of get more data on this variant. But I have to say, I thought he would be a little more circumspect, and the idea that a lot of economists said over the weekend that perhaps the Fed would not go to a faster taper in December. The idea that he sees a new variant and greater virus concerns as potentially inflationary maybe changes that calculus a little bit right now.
Okay, so what's happening right now? Why are stocks plummeting and mortgage rates coming down? That's what normally happens in a normal market. We haven't seen that in the last couple of years, but today and yesterday we saw that. So what's happening? Well, a new version of the coronavirus came out and it's spooking the markets. So what happens is you'll hear a phrase, flee to safety. What that means is basically, in a nutshell, people are taking their money out of the stock market and they're putting into bonds or safe havens, which bonds are one of those things. We follow on here the mortgage-backed securities. It's a bond that trades on Wall Street that is the biggest component of your mortgage rate, what makes up that mortgage rate or how the mortgage rate gets created. It's not the 10-year Treasury or anything like that, which a lot of people think. So let's drill down to what's happening today, where mortgage rates opened, what they're doing so far today, and the economic calendar for the rest of the week, and where I think things are going to be going from there. So let's first of all go to the headlines, and you're going to see a common denominator here. Powell to tell Senate, Omicron variant poses downside risk to the economy, complicates inflation pictures. So what they're saying here is Steve Leisman said, this is going to cause more wage pressure, shipping pressure because of labor, and a whole bunch of other things. So is it going to potentially create big issues in the economy? It can. How severe is it going to be? Well, the Federal Reserve is meeting in December, mid-December, and they're going to come out and lay it out. But today, Federal Chairman Powell is speaking, and he might give us some insight. So you might see a really volatile day today. So I might be coming out with a noon post to let you guys know what's going on. So the next thing we want to see is, again, the common denominator here. Stocks under pressure again as Omicron variant rattles Wall Street. Down 250 points to open the market. Okay, so that's what's going on in the overall markets. Now, what's going on with interest rates? Well, here's the interest rates where they opened today or closed yesterday, I guess I'll say. Guys, these are not my rates. These are the national averages. Okay, these are compiled by Mortgage News Daily, a fantastic system that I use, and this makes it a little bit easier for me to explain to you where things are and where they're going from here. So right now we see the 30-year is at 3.21, down 3 basis points. I'm going to read right across here to make sure you guys understand this. It gives us the product, 30-year fixed rate. Today, where we opened. Yesterday, where we closed. The change so far, 52-week high and low. This really doesn't matter. Who cares? Because, you can't get there and you don't want to get here. All right, so then the 15-year, 2.6, down 2 basis points. FHA/VA is steady at 285. Jumbo's at 313, down 2 basis points from yesterday. And the 5-year ARM is up 8 basis points. So why would you take a 5-year ARM when you can get a lower rate on a 30-year fixed? That's my input there. So now let's get to the MBS market. This is why people follow me. What's going on here? Why do we follow this? Well, again, it's the bond that trades on Wall Street that is the biggest component of your mortgage rate. So we follow the trends. Think of this as a stock if you're watching it. All right. Down through here, I apologize. These aren't black cells, as you guys know that watch me for a long time. These are green, but I'm working on a green screen that I should have up in the new studio ready and broadcasting tomorrow. So we're working with green screens, so everything green is turning black right now in here. So that's what's going on there. So what's going on right here, this is what's happened to the last 3 months of the MBS markets. We just want to focus right in here. Inflation kind of in through this area, it played havoc and the markets just crashed. So again, this is what's happening to the price of the bond. As the price goes down, which is represented here, that's not down, that's up, but I'm getting somewhere, this trend here. As this MBS market goes down, mortgage rates are going up. As this goes up, they're coming down. We love these green candlesticks. And you're going to see we're at 31 right now. This is probably going to change. When I started and I glanced over, we were at 23. So we're up 8 basis points from when I just flicked this thing on. Okay, so that's what's going on right now. We have a nice rally. What I said the other day, and I've been saying consistently, is I see us being trading at 102.4. I won't dig into that for you here, but there's a reason for that. So the 102.4 trigger is right here on my green line. We surpassed that on last Friday. And I said, you know what, I'm not going to start locking, even though we hit on my trigger level, because I want to see a reversal. I want to see this come back down. Why would I jump in now while this is rallying? And again, as this goes up, mortgage rates are coming down. Why would I lock you in while rates are coming down? Okay, so that's what's going on right here. We've seen a big move in the last 2 to 3 trading days. All right, so the trend is great there. Intraday, you're going to see this. This is crazy. Look at all these. There is no red in sight. That means there's aggressive buyers in the market. So I'm just going to sit on the sideline and watch this deteriorate, or just keep climbing, bringing down mortgage rates. When I see a reversal, I'll start buying or locking in my rates, because this is one heck of a rally. Okay, from here to here. The economic calendar is basically the biggest news coming out today is Federal Chairman Powell is going to speak at 9 o'clock. And he could potentially rattle the market. So I might be posting a midday alert to let you guys know what's going on. But so far it looks good. The rest of the week, we have tomorrow ADP payroll numbers. On Thursday, we have initial jobless claims and continued jobless claims. And then on Friday, we start seeing the unemployment rates and those numbers. So basically all week is just the employment numbers and what that looks like. That also could play huge havoc on the markets. So we're sitting at our computers watching this meticulously to make sure we don't miss an opportunity for you guys. So if you find value in my channel, please, all I ask you to do is give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. If you're like, hey, Dan, I like what you're doing here. I like what you have. How do we get in touch with you? Really simple. It's the same website. Go to therateupdate.com and it'll take you here. We did add the schedule meeting down here. It's a floater. So if you want to schedule a meeting with us, just click there. You'll get assigned to me or one of my mortgage advisors. You're going to pick a day and a time. We're going to reach out to you at that time via Zoom or by phone call to answer any and all the questions that you have. If you'd like to apply now, just click here or up here. You can do the both. If you want to explore some options or what's available to you, just click here. But what most people are doing is one of two things. They're either calling us 844-775-5626, or they're scheduling a meeting. We'd love to talk to you because every loan is kind of unique to you. So we want to understand what's going on, what your thoughts are, and what you're looking for. So that's it for right now, guys. I will be posting either midday If there's special alerts, or I'll be coming back later this afternoon with some more economic news for you and what's going on in the real estate market. And no, I don't expect a housing crash. So I'll see you later this afternoon. Thanks for watching. God bless. See you soon. Bye-bye.